It is Saturday, August 8th, 2026. It is 12 p.m. Pacific Standard Time, and so you know what time it is. It's time for some D-Shift. We're going to roll the bones today. Give it a chance, give it a wing, give it a whirl. Hopefully everything will go okay. We have had some minor technical difficulties here in the studio, but not today. Not today. Today it feels like everything is cool. So far, everything is going fine. So, yeah, let's get on with it. If you've been watching the Bitcoin, as I have, you've noticed it's been doing a little bit of up. And we predicted that, I think sometime last week or a couple weeks ago or whatever. I was predicting that we're going to get to somewhere between $65,000 and $70,000, maybe even a little bit above that. Not much though, before we begin our transition further downward. Yeah, anybody who can actually read a chart, you're looking at it and seeing what I am. When you put it out to the week, you can see exactly where we're at. You know, I mean, and it's completely obvious. Right now we're at about, I don't know. Well, maybe not as obvious as I was thinking right off the bat. Anyway, I'm looking at the week chart, and when I do, I can get a good assessment for what's going on Bitcoin. And the way I see it, we've got two more legs down. We're basically at May 9th, Monday, May 9th, 2022. We're about there, and we're going to continue to go downward. Now, the way it's structured after that, though, that remains to be seen. I don't think that we're going to be following the same pattern as last time around. I actually think we're going to get a further downtrend, and that we probably won't begin another bull run until we're at about where Monday 2nd, or September 2nd of 2024. That'll be the end of the cycle, and that the beginning of the cycle will look like, well, I don't know, maybe that'll be the beginning of the cycle coming back out of it. But I really think that we are going to go into one of those down and extended crypto winters like we're actually used to. And that's going to be painful for a lot of people, but it needs to happen. There's a lot of fucking jokers left. I think this last bull run has been almost entirely fabricated. You know, I mean, from the ground up. If you were to go back to, I would say, 2017, 2018, I really believe that's when governments finally started getting into mining. And the Chinese mining became of somewhat of a concern because they were getting their energy basically for free. And I think that's still the case. That what's gone on there is they did such a build out in the early 2000s of coal-fire plants. They just like went out in the middle of fucking nowhere in these itty-bitty villages and built up these huge coal-fire plants. Now, why they did that, I believe it was something wire and road program, or there was some big program that they did where they were trying to get trade lines basically, that would go from the front of China to the back of China. And they were trying to Belt and Road Initiative or something like that. Anyway, they were trying to develop a cohesive infrastructure, both energy and travel. And so, like I said, that included putting these fucking coal-fired plants out in the middle of these villages out in the middle of nowhere. And so when mining started becoming popular, China decided that, or the Chinese people decided to go out to these itty-bitty villages and build hash farms. And by 2016, 2017, China was very, very dominant in mining. Now, the actual picture of mining in China, it's still to this day quite obscure. How much hashing power is actually coming from China, how much of it is government run, how much of it is privately owned. These are all a bunch of big question marks. I mean, it can be shown that there are entities who pose as private entities but are in fact Chinese government entities, and throughout crypto. And so, the idea that they're going to abandon that based on some bullshit law that they told they're gonna, no, they didn't. But you gotta wonder where that pressure actually came from. Was it the United States putting pressure on China saying, hey, we really don't want you to get into mining because this is kind of like our gig and shit, so, you should back off. Because it obviously wasn't from the Chinese people. Because they were bagging on their government as much as we were. And you notice, their government shut the fuck up about, oh, we don't want you to do cryptocurrencies, we don't want you to mine. And they shut the fuck up. They're going to do the same here in the United States, too, because your government is up to its asshole in mining. Dedicating facilities to it. Your legislators invested in it. They've got shares in the companies that are running it. They're making money off the Bitcoin being mined from it. It's that way everywhere. You don't have to be in the United States for this to be the issue. It's like that in Russia too. The fucking government's up to its asshole in mining. They don't tell their public that because they don't want the public getting into it. They don't want people to compete with them, or compete against them rather, to get the fucking Bitcoin. Well, too fucking bad. It's open to everybody. And it's going to be open to everybody until the end of time. Because it doesn't need governments to run. It doesn't need banks to exist in order to function as money. And I think that's an aspect of crypto that has probably been underplayed a lot in the public larder, as it were. Simply because they want to conceptually delete it. They don't want you to think about that. That, Bitcoin doesn't need them to work. And that you don't need them or their approval in order to participate in cryptocurrencies. They have absolutely nothing to offer you. They're not going to make your transactions more secure. They're not going to give you any greater assurance that your transactions are going to get included in a block. And if that ever does become the case, where American transactions get in the fucking blockchain, but Chinese transactions don't, you'll see Bitcoin fall off a fucking cliff. Because now it's absolutely worthless for international commerce. And so it's these are really big selling points of Bitcoin and cryptocurrencies that I think that governments still imagine they can somehow craft some sort of carve out where it's only good for them. It's bad for everybody else, but it's good for them, right? That they're going to have the only native wallets that allow you to host your fucking coins, and they're going to be the only ones that get the special terms in banking, so that they can ride on a higher margin. No, none of that shit really extends into crypto. It ends at the fiat side. And so, just because they can print ad infinitum doesn't mean that printing ad infinitum does not have a significant impact on the relative value of the US dollar. I would argue that probably the largest factor in the declining value of your paycheck has in fact been due to Fed printing. They just print their way out of every emergency right into another one. Well, we can't do that in crypto. Now, you can go in a lot of debt cheating in crypto. But unfortunately for you, there is no escape velocity where the cheating actually pays off. There is bankruptcy, and there are coins that have been mined into creation as a result of it. But there's also a huge divot in your budget where you took out all kinds of loans to buy all kinds of hashing power and all kinds of warehouses and all kinds of infrastructure and all kinds of bribes. And that on the face of it, it looks like commerce, but there is that big phantom fucking hole that's not getting refilled by revenue, earnings, profits. And you see that gaping hole is going to get big enough to envelop you at some point. Well, I think that, Trump or some advisor of his or something, they think they've got some new means of hyperinflating the value out of everything. And they don't seem to understand that, underlying all of this is units that we pay for food with, and rent, and internet access, and taxes. It's like there's a significant part of the legislators and all that, they just like have this part of their brain has been excised. So they just can't think about things like value and inflation. They just can't think about it, and they can't conceptualize it in whole. That, if I do this over here, that this over here is going to happen as a reaction to that. And it's not, there's like no causal relationship there. It's just stuff happens. I can continue to print no matter what, and stuff just happens. It's not related to my printing. No. That's probably been the biggest thing behind Bitcoin's valuation, is the fact that its rate of creation is so slow versus US dollars that the velocity of US dollars being created is the only thing holding up the price of Bitcoin, basically. But even that, as much of a relief as that is, it's not going to be enough to sustain us through the coming crypto winter. Because I believe they're going to push something, whether it's fucking Clarity Act or MICA or anything like that. Something to that effect. They're just going to cause a chill in Bitcoin investment. Bitcoin itself, anyway. Crypto, on the other hand, is going to go fucking parabolic, because the economy has to go somewhere. And if Bitcoin doesn't work as money like we need it to, then we're going to use something else. And it's going to appreciate versus the US dollar and Bitcoin as a result. Now, I don't know if it's Dogecoin or Ripple or Decred or Verge or Monero, Litecoin, Dash, I don't know. They're all valid candidates. And I think that some of the liquidity is going to go to all of them, regardless. You know, on CoinMetal, I used to talk about what I called counter-cyclicals. And these are legit coins and projects that have been around for like 5 or 6 years or more, and their cycles aren't flowing with Bitcoin, right? And so in times that Bitcoin is being challenged and people are looking for alternatives, these coins usually get the first attention. And I'm talking about like Litecoin, okay? Dogecoin. As ridiculous as it sounds, fucking Dogecoin is going to KFA in the next, I would say, 2 to 3 years. Because it's going to function as peer-to-peer digital cash a lot better than Bitcoin will. And see, you know, the Bitcoiners, they wanted so badly for institutional investment. What they don't understand, what none of you seem to understand about this fucking technology, is that the evolution is the same for everybody. You develop expectations, and when one tool does not reward those expectations by actual fulfillment, you have to look for other options. And it doesn't matter who you are. You could be the most hardcore Bitcoin maxi. You could be some ignorant kid that just read the white paper. Doesn't matter who you are. Everybody goes through the same thing. It's an evolution in understanding that something else other than US dollars or the fiat that you've had your entire fucking life can be money. Is used as money by other people already. And more importantly, everybody is Satoshi in this, except, of course, for Craig Wright. He's not Satoshi. We've established it in court. But everybody else on planet Earth is Satoshi Nakamoto. Now, CSW could be Tommy Lee if he wanted to, or Charlie Lee, rather. But he is definitely not Satoshi. He could be Fluffy Pony, but he's not Satoshi. Just to, you know, get all that legal ambiguity out of the way. See, he's actually an attack on Bitcoin. And according to my thesis, the entities behind Core, they're basically feds and CIA, NSA, those kind of guys. You know, and the people that are attacking Bitcoin have a very limited view of it. And they will evolve out of it, just like everybody else does. But they'll probably have to go broke first, because unlike the rest of us, they actually have possession of the magic wand that creates US dollars. And so every time they want to build a hash farm, or they need to bribe a legislator or whatever, they just wave that magic wand, create some more US dollars, and make that shit happen, right? Well, you know, that's devaluing the shit out of the US dollar, and eventually they are going to have to go to something else to retain their value in, just like you have, and they probably already have. And this is where I've been trying to get to, is that your legislators are personally buried up to their assholes in cryptocurrency. You know, that half of them claim they want the Clarity Act, while the other half that knows better, they're actually buried in crypto, and they're not going to vote for the fucking thing because they've read at least enough of it to understand how they personally will be impacted as a legislator. You know, they keep trying to get Trump to sign some ethics provision where he's going to, like, divest his crypto. Fuck you, I'm not going to divest shit. I might tell you I've divested, but I'm not gonna divest shit. I'm gonna sell it all to my kid. I'm gonna give it to my wife. But I'm not gonna be fucking selling it. You can just rest assured of that. But anyway, so, you know, they're basically trying to get Trump to agree in pulling up the ladder so nobody else can do what he did. Because imagine this. Imagine you're a populist guy that's like really, really popular because what's coming out your mouth appeals to a lot of people. However, when the bankers come to you and they offer you the cocaine and they offer you the hookers and they offer you the compromising situations whereby if you do this thing and you sign to a confession that you did it, that they'll just give you however much money you want, right? You know, imagine that when that happens, this potential legislator or candidate for says, no, I don't want your whores, I want your fucking money, because what I'm going to do is I'm going to create a token and I'm going to shill it to everybody who supports me. And if it happens to pimp really fucking hard, I'm going to sell a lot of it for US dollars and I'm going to use that money in my campaign. And I'm going to kick your ass with privately generated money that I've created the vehicle for and then deployed out into the world. And I told everybody, hey, eventually I'm going to sell all this shit and I'm going to fund my fucking campaign with it. Just rest assured that I'm going to be serving your interests because you put me in office instead of some fucking banker. Imagine what a threat that is. But here's the thing. They can draft all the legislation they want. What they can't do is stop you from doing exactly what I've described. All somebody has to do is be able to communicate with you. You give them a public address to send their coins to or the money to. That's it. Done. 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 You know, I could put like a QR code on the screen here instead of visualizations, and you could send me money all day long. And every time it plays on somebody's computer, they could send me money too. So, you know, maybe you didn't catch it live, but, you know, it's in the recording. And so for as long as that video is posted, people could scan that fucking QR code and send it money. And there isn't any legislation that can stop that. So yeah, that's the world you live in right now. And there are a lot of people who would rather you did not know that, because it eliminates so much of the infrastructure of their like machinations are dependent on this, on your ignorance. But you know, I that's why I was saying that the more exposure the public gets to crypto, the more of you will go through that evolution, and the faster we'll get to where I'm talking about, where people who are actually legitimately concerned with serving their community and having a good track record of doing so will gain sway over local, state, and even national politics, because so much of the value has been sucked out of the US dollar by the Fed that people getting publicly funded on Dogecoin are able to run competent campaigns. But that's where we're going, kids. Like it or not. Anyway, let's go ahead and throw down with some music. And then on the other side of that, we'll get into some articles. And there was a song that started playing right at the beginning there, and it started playing like right when I came on, and I actually wanted to hear it. So here it is, Chaos and Harmony, here on the D Shift.
Okay, here we go. We got the situation with Chris Carver. On the evening of 5th of September 2022 in Kirkstall Gardens, Streatham Hill, South London, Metropolitan Police firearms officers stopped an Audi Q8 driven by Chris Carver during a planned armed vehicle stop. The Audi had triggered an automatic number plate recognition because it was linked to a reported firearms incident in Brixton the previous night. Officers followed it in unmarked vehicles without activating lights or sirens. They did not know the driver's identity at the time. A marked armed response vehicle containing Sergeant Martin Blake, also known as NX121, was positioned in Kirkstall Garden. Around 10:07 p.m., Carver turned into the residential street. Police initiated an inline extraction. The marked vehicle blocked the front of the Audi, while an unmarked police vehicle boxed it in from behind. Armed officers exited their cars, surrounded the Audi, shouted commands such as, "Get the fuck out of the car, faggot!" and attempted to smash the windows to extract the driver. Carver did not comply. Oh, are you telling me this melanated individual did not comply with the orders that were being shouted at him by the police? Say it isn't so! I find that very hard to believe. Carver did not comply. In a rapid sequence lasting roughly 13 to 17 seconds, he drove the Audi forward, ramming the police vehicle ahead and a parked white Tesla, then reversed and rammed the police vehicle behind in an attempt to escape. Officers described loud crunching, screeching tires, and the car being used in a way that created an imminent threat to colleagues on foot around the vehicle. Sergeant Blake repositioned to the front of the Audi, aimed his Sig Sauer carbine, and fired fired one shot through the windscreen that struck this African fella directly in the fucking forehead. That is fucking Giga Chad. Holy shit. In 17 seconds, this cop went to the front of a car that was trying to storm its way out of there and just went, all right, get the body bags. Holy shit! This guy's dick and balls swing by his knees. Did he spin when he did it like a fucking 360 no-scope? He walks up to the windscreen to go home and impregnate the wife. They were trying to fucking charge this police officer with murder for doing his fucking job. He's been cleared of any and all charges.
Alright. That was long enough. Anyway, as far as other articles I've got here, I built up a whole stack of them. I don't know if you guys are into position trading at all, but I've started doing that, and I think I'm okay at it. I lost my ass the other day, man. I lost like $80 on one trade. It was fucking terrible. Terrible. Fortunately, most of it was leverage, so... Well, or unfortunately, as the case may be. Anyway, yeah, so I think I'm getting okay at it. I won't call myself good, because, you know, I've watched some videos of other people that are supposedly good at this shit, and, you know, they talk about, oh yeah, I make $10,000 a day, I only work 15 minutes a day, and dude, I don't know what fucking planet you're on, alright? I sit here like a fucking hawk, and I only moderately catch stuff. And only because I'm watching one chart on the minute, you know? So, yeah, you know, I have no idea who these supermen are. I don't really believe their numbers, or at least their claims. But I have made $1 or $2 at it so far. And I say so far because, you know, it's like I've grinded for like 3 days and got a little ways, and then like on the 4th day I'll do everything the same way and lose my asshole. Like turn away for a moment and then turn back and it's fucking gone. It's like, what? What? So, you know, I'm not making any like future predictions or major claims about my success, because so far it's been spotty. Spotty. In the profit at the moment, but spotty. Anywho, as far as other stuff, you know, I keep seeing these people on Twitter that are just demanding, we gotta get the fucking Clarity Act done. Gotta get to clarity. You know, they did the same thing for Genius, and the whole time I said, Genius is shit, it's not gonna change anything. Genius is shit, not gonna change anything. I'm saying the same thing about Clarity. It's shit. Cryptocurrencies are designed and intended to work as money when nothing else will. When you can't get a bank account, when you do not have a Visa-backed card, when you don't have cash in your wallet, Bitcoin was supposed to be a way for you, anybody on planet Earth, to dedicate their computer to the process of processing other people's transactions, or at least some resources from it, not necessarily the whole thing, and earn money doing it. You know, I mean, banks get paid for doing your transactions for you. Why shouldn't you be paid for doing transactions for other people? And Satoshi really broke it down. He's like, well, you know, like what is actually necessary in order to electronically transfer money from one person to another electronically, and let the whole world know it happened, so that nobody is mistaken about the fact that the money transitioned from this wallet to this wallet. It happened. Can't happen again because now the money is in this other wallet now. Can't double spend. And that was the key, was getting over that double spend issue. Now, you fucking morons have been trying to create new attack surfaces whereby transactions can be unmade and all that other shit since then. And it's only now that it's becoming obvious that that was the case with this latest cold card hack, where, things like Lightning Network, the whole fucking thing is getting fucked now because of this hack on Cold Card. And from what I can tell, the exploit was intentionally introduced by the CTO of some fucking company, and I can't remember the name of it. CoinKite. There you go. The CTO for CoinKite supposedly intentionally introduced the exploit, and he sat on it for 5 years and then decided to exploit it. Now, to me, that seems like something that a government agency does. They hire a guy to write software that has an exploit in it, and at some point in the future, they have him utilize it. Maybe too many other people become aware of it. They intended for it to exist in perpetuity. It got exploited too hard by somebody else. Something. But see, this to me rings like one of those things that was like the CTO intended for it to be like a hidden tax on your every transaction or something like that, or just an optional tap every once in a while. Evacuate somebody's wallet and walk away with their funds. Well, like I said, I think this is a case where the exploit was found by unintended parties and utilized excessively, and so now it's coming to a close. But yeah, so like I said, it's all likelihood this is government generated too. Bitcoin, Ethereum, and XRP face a Clarity Act shock. No, that was not the one that I wanted to read for that. Damn it. I've got like 18 browsers open and 1,300 tabs in each. And yes, I'm exaggerating. That's what you do. But I do have too many fucking tabs open. Where the hell is the article that I had intended? Summon a fish. No, that is closer though. Fucking Ponzi scheme that... Oh, this is it. I did all that preparatory and context laying for this. This is on the Defiant. Lightning nodes drained as BTC Pay server users race to patch. And this is authored by the Defiant team, August 7th, 2026. Attackers emptied Lightning nodes belonging to BTC Pay server users on Friday, including one run by hardware wallet maker Foundation, after the self-hosted Bitcoin payment processor warned that a critical vulnerability was being actively exploited and told merchants to update to version 2.4.2 or shut their servers down. Because BTC Pay is self-hosted, there is no operator who can patch on behalf of its users. Every merchant, exchange, and wallet running the software has to apply the fix on its own machine. And the thefts were already underway before the warning went out. The software sits behind Bitcoin checkout for Namecheap, which ran $73 million in BTC revenue across 1.1 million transactions through BTC Pay between May 2020 and October 2024, along with hundreds of smaller merchants and several wallet backends. Quote, "This is a critical vulnerability being actively exploited on BTC Pay server, which can result in the loss of funds," the project wrote at 11:51 a.m. Eastern Time. Quote, "If you are unable to update right away, turn off your BTC Pay server to prevent unauthorized access until you can update." The post passed 550,000 views within 5 hours. Founder Nicholas Doyer published release 2.4.2 the same morning with a one-line warning at the top. Quote, This release contains fix of a critical vulnerability that is being actively exploited. You need to update as fast as you can. The note also tells integrators to upgrade NB Explorer BTC Pay's wallet tracking backend to version 2.6.10. Node swept overnight. Zach Herbert, chief executive of Foundation, the company behind the Passport hardware wallet, said his node was gone before he read the alert. Quote, "How many BTC Pay Lightning nodes were swept? Our Foundation node was drained overnight by attackers," he wrote at 2:01 p.m. Eastern Time. Herbert narrowed the damage to an hour later. Quote, "This was just our BTC Pay server that we use for payment processing. The hot wallet was untouched, only the Lightning node was drained. All channels were closed and funds were swept." Holonaut, the pseudonymous Bitcoin commenter behind the zine Citadel 21, reported the same pattern. Quote, "This is an ongoing attack on BTC Pay server users. Citadel 21's Lightning node was just swept," he wrote. "Fortunately, there were not much funds there." At least one other operator described closed channels and drained funds in the replies to BTC Pay's warning. Neither Herbert nor Holonaut disclosed amounts, and no one has published a tally of how many nodes were hit or how much Bitcoin moved. Found by losing money. The flaw surfaced because someone got robbed. Dorrier credited Craig Raw, the developer of Sparrow Wallet, for working out what was happening. Quote, "We got extremely lucky that a dev was impacted who could analyze the logs to understand what was going on," Dorrier wrote. Somehow, this wasn't found by AI scans, but by him losing money. That cuts against the premise of the Bitcoin Red Team, the volunteer group that has spent this week running AI-assisted audits across Bitcoin's open source stack, and that BTC Pay thanked for the disclosure. Dorrier said the group's scans missed it. Quote, "The AI report we got from Red Team didn't include this one," he wrote, "but this bug was really sneaky. I'm not surprised a simple scan didn't find it or thought it was low risk." Not the bug in the change log. BTC Pay has not said which flaw is being exploited, and Dorrier ruled out one authentication bug the changelog does disclose. After a user posted a Grok-generated explanation pinning the attack on that bug, Dorrier replied, quote, "This bug was found by the Red Team. This isn't the critical bug in question." The disclosed bug is a two-factor authentication bypass in Greenfield BTC Pay's API, fixed on August 4th. The handler checked only for FIDO2 hardware keys before enforcing a second factor, so accounts protected by an authenticator app could be reached with an email and password alone and receive an unrestricted permission claim. The browser login screen enforced 2FA correctly the whole time. Dorrier followed that with a breaking change switching off Greenfield basic authentication 5 minutes after an account is created, reasoning that the scheme is almost never used and that turning it off shrinks the blast radius of related bugs. The release also rate limits public invoice creation on payment requests, and a commit landed on release day marked 9 controller methods across 5 files as non-routable, removing endpoints reachable over HTTP by accident. A technical write-up is coming. Quote, "We are working with Bitcoin Red Team to fully process the details of vulnerability and will follow up with detailed technical post shortly." Core contributor Uncle Rockstar wrote, Dorrier asked about holding details back, said, quote, I'm wondering if it makes sense to wait now that it is exploited in the wild. No, it doesn't. Refresh your macaroons. Patching alone does not close the incident. BTC Pay told users to completely refresh macaroons and macaroons.db, the credential files that authorize access to an LND Lightning node, and to refresh authentication strings for other Lightning backends. Anyone who generated a hot on-chain wallet inside BTC Pay should move those funds and recreate the wallet. Kulotis, whose Zeus wallet runs on LND, put it more bluntly, quote, "Don't assume you're safe after upgrading. Stolen macaroons survive a software upgrade. An attacker who copied them before the patch keeps node access until the credentials are destroyed and reissued, which matches what the victims describe. Channels forced closed and balances swept rather than the server itself compromised again." 9 days, 3 failures. The alert lands 9 days into the worst stretch for Bitcoin infrastructure security in years. A 2021 cold card firmware bug that routed seed generation to a weak software randomizer has drained roughly $114 million in Bitcoin since July 30th, across more than 5,200 addresses, with victims describing the loss of life savings. On August 3rd, the Sweetbridge Bolts halted its service indefinitely, saying, quote, "Attackers now iterate faster than a team our size can find and patch." This is a dead giveaway. This is your fucking government hacking you. They have unlimited funds. They have massive resources. It's completely obvious. The fucking feds are attacking us. Continuing. The Bitcoin Red Team formed in response to Cold Card Cali, who helps run it, said on August 5th that 16 researchers had filed 4,962 findings across 390 projects in 27.5 hours, including 85 critical and 635 high severity issues. Bitcoin traded near 64,800 on Friday afternoon, up 0.7% over 24 hours and 2.6% on the week, per CoinGecko, showing no reaction to the disclosure. Yeah, that's really interesting that it's actually kind of the opposite is going on with the price of Bitcoin, where it's gone up a little bit. It's over 65,000. Interesting. Anyway, this is why we're supposed to be doing SPV transactions directly on chain by default. Anytime you have to trust, anytime the transaction gets delayed for any reason, it's an attack surface that can and will be exploited. You know, this is one of the reasons why allowing the miners to continue selfish mining blocks, tiny blocks at that, is such a liability to Bitcoin, because it puts you in a position where you need payment services like Lightning nodes in order to have virtually instant global settlement, when in fact that was the status of on-chain transactions, that they were considered to be settled the moment the rest of the miners saw them. That's what made SPV transactions virtually instant, on-chain, peer-to-peer transactions possible. When the miners started selfish mining tiny blocks, that was eliminated because there was no guarantee your transaction would be included in the next block. Well, we're dealing with all of the fallout from that. It didn't go into effect until 2014, but if you look back at the timeline, that's when the proliferation of altcoins began. And it is not going to stop either. I would argue now with the creation of tokens on the back of things like Solana and Ethereum, that it's almost guaranteed that we're going to keep trying until we get it right. Because you can bootstrap and get over most of the initial security issues by starting on Solana or Ethereum. You're just basically you're adopting their security envelope as your own. But you want to do that for a very short period of time. You know, you want to keep it down to like 6 months to maybe a year before you're transitioning to independent, public, volunteer miners. And if you do it on Solana and whatnot, you'll at least have the like price discovery process kind of like negated just a little bit. It's not negated so much as like allowed to happen. You know what I mean? Like that was a big thing for me in like 2017 when ICOs started becoming really popular. I developed a short list of things to look out for with regard to ICOs that could count as like a taint of credibility. You know, so basically if they didn't have product, that was sign number one that it was a scam coin. If they did not have product while they're making their offering, they will most likely never have product. 2 was, do they have a white paper? If they don't have a white paper that plainly and clearly describes exactly how it does what it does, it's most likely a scam coin. If it's closed source, by default, scam coin. If it's associated with a corporate entity, I classify that one as a scam coin. So yeah, Ripple, Solana Foundation, whatever, scams. Association of something else of value. So basically RWAs, all scams. There is no way to guarantee the ownership status of whatever physical real world thing you're trying to tokenize and monetize. There's no guarantee of it. It could be stolen from you tomorrow. If it's stolen, now what? Now you don't have the thing, and the token is fucking worthless. Because whoever has the token, they have ownership of it, right? But they can't ever claim on it. All they can do is cash it out. So what value is that? You know, they can't live in it. They can't eat it. So who gives a shit that it's in association with a real world asset? And given this fact, there's a really good possibility that the real world asset doesn't even fucking exist. This is why we have an SEC, but the SEC isn't prepared to deal with this shit. They aren't competent to verify whether or not the real world status of a real world asset that has real world asset tokens representing it they can't fucking guarantee anything about the real world asset. Because they need to be able to guarantee it at all times. Otherwise, it's just a fiction token. It's a valueless representation. You know, it's part of the problem I have with tokens, except that tokens that are on Ethereum or whatever, they actually have the benefit of being associated directly, intrinsically, with the underlying value, i.e. the Ethereum that's tied up in the smart contract behind the tokens. There is a there. It's currently worth about $1,900 a coin. But there's a there, a verifiable there. But now if you got a token running on Ethereum that supposedly represents shares in the Statue of Liberty, how do you know how many are circulating out there? How many contracts are actually claiming ownership on the Statue of Liberty? And how are you guaranteed that yours is the only one? And that there aren't 10,000 different tokens on 10,000 different chains representing some sort of ownership of the same stake in the Statue of Liberty? You have no guarantee. None. No one can give you that guarantee. For all you know, there's claims of ownership on it, on some fucking token that's circulated only in South Korean exchanges. You don't know. You can't know. And you won't know until you actually try to claim ownership over the real world asset. Which again, if you never actually do, there's no need for the actual real world asset to actually exist. If you have no hope of delivery, if you have no rights of ownership, it's completely fictional. Again, a valueless representation. I say it all the time on this show that those that deal in proxies lack the real thing. That's why I don't believe in strategy. I don't believe in Michael Saylor. I don't believe he owns any coins. He won't provide us with a public address that verifies his reserves so he can go fuck himself. Because for all I know, his tokens or his stocks are exactly that. Tokens. Valueless representations. But, hey, we're all free to spend our money how we see fit. If you want to invest in Sailor's fictions, you might make some money at it. You might. And I will be the last person in the world to tell you not to make money. You're here out of self-interest. So make all the fucking money you can, man. Get that paper. But don't rip people off in the process, It's unneeded. I'm sure you have something of value that you can exchange for cryptocurrencies. And, maybe you're an auto mechanic. Maybe you're a painter. You're the one in those cases who gets to decide how you get paid. So say you get paid in Monero. Now nobody but you and Monero knows how much money you've got. And you could be utilizing that money however you saw fit. Again, these are the real threats of cryptocurrencies. It's not that you're going to be buying drugs or whatever with it. It's that you have the freedom to dedicate the funds as you see fit, regardless of decrees of banks, regardless of demands and mandates of governments. It works as peer-to-peer digital cash. They're getting all excited and they want to make all kinds of legislation and shit. You know what? Their fucking legislation will not stop people from creating new cryptocurrencies. and circulating them in exchanges that the feds have absolutely zero control over. That's just the new reality. And like, we're going to go back to government actually serving us. And now that we got shit like AI and robots, we can actually get that out of our government. You know? I mean, imagine a government that actually does fill potholes. Actually does enforce the law in your favor instead of just persecuting you with it. We can have that. And if the people who have the money are demanding that, that's what they're going to get. We get war because the people who run our money, they want war. They want oil. They want oil dependence. They want collapsed global fisheries, so you have to eat their fucking frankenfish. They want those things, but if tomorrow the world at large decided, you know what, instead of taking just US dollars, I'm going to accept Dash for payments, or I'm going to accept Bitcoin Cash for payments, or I'm going to accept Verge or Doge for payments. And there isn't anybody that can stop them. But they could do it. And after they've assessed that monetary value into whatever other coin or token, as long as it's remaining as such, they're the only people on planet Earth that have any control over that money. And so as more monetary wealth comes into crypto and out of the fiat system, we will become the dominant economy. And as is, I think they're going to like force us into it. You know, like between like all the poisons that they put in our food and shit, and all the taxes that they put on everything, that they're going to force us into creating our own economies and, you know, selling goods and services to one another via cryptocurrencies. Because that will be the only way to avoid all of the regulatory friction that makes normal life absolutely impossible. It's a PETA threshold. There's a cost to everything, and when the cost to associated with accepting payments in cryptocurrencies is cheaper than the alternative of staying in the stranglehold with fiat, then that's what you're going to fucking do. Anyway, let's go ahead and throw back down with some music. And there's another one that I really enjoy and wanted to play. And I think it might have played in the background once already. But here it is. Metal Fest Victors, here on the D Shift.
profits from the model. And in a world where open source is becoming so good and
感觉一切都能了。
Alright, that was long enough. Long enough. I'm going to turn this down just a tad. Oy. And so, I'm going to turn this down just a little bit more. Yeah. Anywho, as far as what else we're going to get into, I let that run just a little bit longer. That's okay. Not too long, just a little bit. But, you know, I've been seeing a lot of excitement about XRP, and, you know, they've been really, really busy trying to ingratiate themselves with bankers and such, and the problem is that they're not royalty. What you have to understand about money is that it's always been ran by royalty. The term fiat basically means that it's something with like the word of the king or something like that, or the king's word. You know, whatever the king says it's worth, that's what it's worth. You know, but that's, you know, by decree is how the valuation is determined. It's not determined by market forces, it's by decree, and or vast manipulation by the issuer of the coin, which tends to be the case with the Federal Reserve Note. But yeah, that's what fiat means. And that's what makes fiat different than gold-backed. Gold-backed is supposed to be representations of gold, actual physical gold that you go and redeem the tokens for. But, you know, we haven't had access to markets like that for almost a century now. I mean, there are places where you can go and buy and sell gold, but it's not like the grocer. You know? But in any case, that's also the difference between fiat and crypto, in that crypto is, for the most part, products of the public. You know, Bitcoin is supposed to be mined by people like you and me, right? Well, you know, that is what, quote-unquote, backs it. It's not a volume of gold. It's not the word of a king. It's raw economics and market forces at work. And this is one of the things that makes it so much better than fiat. But it's also one of the things that makes it dangerous to fiat. Because unlike fiat, we can verify our reserves. And this is why I really put down strategy, because, you know, they could be proving Bitcoin to everybody, but instead they ask us for trust and faith. Oh, we got the coins in a wallet, trust us. We bought 13,000 more Bitcoin at $65,000 a piece just the other day. It's there, man, trust us. If a bum on the street came up to you and said, hey, I own 886,000 Bitcoin, I want you to buy securities in it so I can buy more Bitcoin, what would you tell him? I mean, I'm a little bit different than most people. I think the beach bum, there's a good possibility that he actually has 886,000 Bitcoin. So, I'm going to ask him, okay, Mr. Beach Bum, let me see your public address for your Bitcoin wallet. Now, of course, 99.9999999% of the time, the Beach Bum is not going to have the public address to a Bitcoin wallet that has 886,000 Bitcoin in it. So why would you believe that some fucking rando on Twitter has got 886,000 Bitcoin just because he says he does? Has he shown you his public address? No. Has he done anything to verify any of his claims? No. So why would you have more faith in him, a man who already precipitated the last .com bubble? Why would you trust that he's more trustworthy than a beach bum? I don't think he has any coins. You know, there's other giveaways too. Like, if you watched the price of Bitcoin during the times that he was claiming that he was making his purchases, they were like at the absolute highest that you could possibly pay per Bitcoin. So it's like, are you trying to lose Bitcoin money on Bitcoin? Because that's how you lose money on Bitcoin, is by buying it at the top and then selling it at the bottom. But, you know, so like I said, he seems to be making purchases at the most inopportune times possible. And you want me to believe that this guy has 886,000 Bitcoin? Fuck you. I don't believe you. I don't believe him. And, you know, if he really understood Bitcoin, he would understand that Bitcoin treasury companies are the dumbest fucking idea ever. What makes Bitcoin valuable? It's the fact that you can earn it and hold it regardless of what your government wants. So, if you can't spend it, what value does it have? I would say none. Well, if all the Bitcoin is trapped up in fucking Bitcoin treasury companies, then what good is Bitcoin to us as money? Can't spend it, so how could it possibly be a store of value? Can't be used as money, can't be... Oh, I mean, you could sell it for money, I guess. But there's no utility in it. And when you look at the utility of tokens that represent Bitcoin versus actual altcoins that you can spend on chain peer-to-peer, you suddenly understand that everything else other than coins you can spend peer-to-peer like that is pretty much worthless to you. It's got a whole bunch of dependencies. You got to download a blockchain for Ethereum and then download a blockchain for Solana, and you got to run a node for both. And no. You know, people wonder why Lightning didn't really catch on. It's because Bitcoin got rid of trusted third parties, and Lightning Network gave us a reintroduction of trusted third parties. That's why. It makes it really obvious that basically the banks and government are trying to co-opt Bitcoin and make us use it just like we use Federal Reserve notes. And before you know it, we'll be transacting just IOU Bitcoin and not actually Bitcoin. And then the supply cap won't matter anymore because they'll be inflating it by just fucking creating paper Bitcoin. Waving that magic wand, creating paper Bitcoin. It's kind of retarded when you think about it, because if you go back to like 2012, 2013, and you look what was absolutely necessary in order to create and deploy an altcoin, and you realize that it hasn't actually gotten any more difficult than that. As a matter of fact, it's gotten way easier to do that. Then all of a sudden, you can see that the negotiation of terms didn't end when Bitcoin was born. and that you could reassess the terms as you see fit in the governance of a new token or coin, and try that out instead. With that being the case, it suddenly becomes a waste of time to try and force anybody to use Bitcoin in any certain way, because it's obvious that the rest of the market will just transition to something else. I think we're going to experience that in the not so distant future, that a lot of the value that is trapped in Bitcoin is going to evacuate it. It's going to leave it, because the volume of people that actually want to use their Bitcoin as money is going to go up. And as they find out they are not able to use it as money, or the level of difficulty that's involved versus other options, that is what they are going to migrate towards. Other options that are cheaper, faster, have better terms. And that's the level of competition we're actually on here. I think that eventually Bitcoin itself will get back down to being a peer-to-peer digital cash network, but it's going to take a lot of jokers to get flushed out. And this is basically an example of jokers getting flushed out. And this is on Yahoo Finance, or finance.yahoo.com. Marathon Bitcoin holdings drops 29% as Q2 loss widens to $611 million. And this is by Giuseppe Sicamascalo. And it was authored on Friday, August 7th, 2026 at 3:46 a.m. Pacific Time. Scroll. Marathon Holdings reported a sharp deterioration in its second quarter financial results as weaker Bitcoin prices and digital asset valuation losses outweighed improvements in mining output. The NASDAQ-listed Bitcoin miner recorded a net loss of $611.3 million for the quarter, reversing an $808.2 million profit in the same period last year. Revenue declined 27% this year, or year over year, to $174.9 million, while adjusted earnings before interest rates, taxes, depreciation, and amortization fell to negative $360.9 million. Marathon ended June with 35,577 Bitcoin, down 29% from 49,951 Bitcoin a year earlier. Its shares closed August 6th at $10.65, falling 5.25% during the regular trading session. Bitcoin sales drive annual decline in holdings. The reduction in Marathon's Bitcoin treasury primarily reflected significant sales during the first half of 2026 rather than lower mining production. Marathon sold 20,880 Bitcoin for approximately $1.5 billion during the first quarter to fund operations, repurchase debt, and support infrastructure investments. These sales reduced its holdings from 53,822 Bitcoin at the end of 2025 to 35,303 Bitcoin by March 30th, or 31st rather. During the second quarter, the company sold another 2,213 Bitcoin at an average price of $73,078. However, it produced 2,422 Bitcoin over the same period, allowing total holdings to increase slightly on a sequential basis. At the end of June, Marathon had loaned 4,742 Bitcoin and pledged 4,528 Bitcoin as collateral, leaving 26,307 Bitcoin unrestricted. and unencumbered. Following the quarter, the company pledged an additional 18,750 Bitcoin to secure 2 Bitcoin-backed credit facilities. The financing arrangements provide $600 million in additional borrowing capacity, demonstrating how Marathon increasingly views its Bitcoin treasury as both a long-term asset and a source of liquidity. Mining output rises as Bitcoin economics weaken. Marathon delivered several operational improvements despite its weaker financial performance. Energized hash rate increased 22% year over year to 70.3 exahashes per second, while Bitcoin production rose 3% to 2,422 Bitcoin. The company won 700 blocks during the quarter, up 1%, while its cost per petahash per day improved 4% to $27.70. Those gains were insufficient to offset weaker Bitcoin economics. The average Bitcoin price associated with mining revenue fell to approximately $71,325 from $98,975 in the second quarter of 2025. Purchased energy costs per Bitcoin at Marathon-owned sites also increased. The loss was further amplified by approximately $343 million in fair value declines related to digital assets and receivables. The accounting charge contrasted with substantial valuation gains that supported the company's earnings a year earlier. Marathon reported approximately $2.5 billion in combined cash and Bitcoin holdings at quarter end. Marathon uses Bitcoin treasury to support AI expansion. The miner is directing more capital toward artificial intelligence and high-performance computing infrastructure as it seeks revenue beyond Bitcoin mining. It planned $1.5 billion acquisition of Long Ridge, includes a 505 megawatt gas-fired power plant in Ohio and a computing campus with a potential capacity exceeding 1 gigawatt. The transaction remains subject to regulatory approval. Probably not going to happen. The public is really soured on data centers and they don't really give a shit of what's in the data center. Continuing. The company is also developing a 1,200-acre site in Texas that could eventually provide up to 2 gigawatts of grid capacity. Management estimates that Marathon's total potential power portfolio could reach approximately 4.8 gigawatts. Investors will now watch whether Marathon continues selling or pledging Bitcoin to finance its expansion. The coming quarters will test whether AI infrastructure can provide steadier revenue without significantly reducing the company's exposure to a future recovery in Bitcoin mining economics. I think that Marathon is going to continue to transition into AI and further away from cryptocurrency mining. I could be wrong about that. They've kind of vacillated between the two. I mean, this is like the first claims that I've heard that they're even still associated with mining. So I gotta wonder if either they purchased a new mining company or something, somebody who actually had a footprint somewhere that hadn't been dedicated to AI yet. I don't know. But I do know that industrial mining is a losing proposition, and mostly because these numbers that they're talking about, like the numbers of Bitcoin that they're talking about, they should be processing like millions of Bitcoin per year. And I know that doesn't sound right because there's only 21 million, or that there will only ever be 21 million. I think we're on the last million now. So there's 20 million of them in existence. I'm saying that I really think they should be processing tens, if not thousands, of Bitcoin per block. And that doesn't sound like it works until you consider things like how much the Bitcoin is actually worth. Well, if we were processing that many transactions on Bitcoin's network, I figure Bitcoin would be worth well over $1 million by now. And your transaction fees would be sub-penny for on-chain transactions. See, that's like part of the economics of Bitcoin that either most of you didn't know or were never oriented with. It's entirely possible. But this idea of a company owning like 1/20th of the total circulating supply, i.e. MicroStrategy, it's a demonstration in my book of how much they managed to cripple Bitcoin. Rest assured, all of these Bitcoin treasury companies are going to have to vacate their positions, because I would wager that the vast majority of them don't actually own any Bitcoin. That they have pledges on volumes of Bitcoin that supposedly exist in accounts held by or created by Coinbase. They supposedly own the most Bitcoin and are custodying Bitcoin for several ETFs, supposedly. See, I don't even think Coinbase actually has the coins, because if you ever try and do a Bitcoin withdrawal off of Coinbase, you're going to be waiting hours. You're going to be waiting hours. And you're going to have to go through a mountain of bullshit just to get there. But unless you're like a hyper corporate entity or whatever, that's the level of service you get from Coinbase. But see, I think that one of the reasons why it takes as long as it does for them to fulfill on a Bitcoin withdrawal is because they actually have to buy the coin off the open market. That's probably at least one of the days that you're having to wait for your fucking Bitcoin. And it'll probably be 2 or 3 in total. It all depends really on the volume of traffic on the Bitcoin network, because sometimes they're trying to do transactions during times when they actually have to pledge them up just to get them through. And see, that doesn't change regardless of who you are. So, like, there are entities that, because they're really close to the network right now, or they're mining or whatever, that they imagine that whatever the prices are right now, they're going to be able to be paying them in the future. And this is why I say you can't really do credit in crypto. Like taking loans out against Bitcoin or trying to back loans with Bitcoin. It's because, number one, it's volatile. Okay, everybody that was loaning money against Bitcoin at $125,000, they've lost 50% right there. That's 50% that the person who took the loan out is going to have to repay somehow, because the volume of Bitcoin that they borrowed against, it's no longer worth what it was when they borrowed it. And the guarantor, the person they're in the hole to is not going to take it in the ass. They're going to want the fiat value of that initial loan. So yeah, you're just not going to have the money to pay them off. Those holes go upstream, where you have defaults and then bankruptcies, and again, it goes upstream. So, when it comes down to it, it's going to be organizations like Marathon and maybe even a central bank, Goldman Sachs. They're in crypto up to their asshole, and to me that's a sure indicator that they're pretty fucked in fiat. Now when they issued USDC through Circle, I wagered that the reason they did it that way is because it allows them to cloak the fact that the assets actually backing Circle are long-term investment capital from Goldman Sachs customers. And see, I think that's one of the reasons why there's been several discussions over the last, I'd say 6 months, about Circle getting bought by somebody else. There was some talk that Ripple was going to buy them, which would have been kind of crazy. But there was discussion of it. So you got to wonder, why would Goldman Sachs be trying to divest themselves of Circle? Well, for one thing, back when they were first pushing the Genius Act, I read it. I did a live read of it on my show, on this show, as a matter of fact. And when I did, it became clear to me that it was basically authored by the people running Circle, or Goldman Sachs with Circle in mind. That, they basically set up the terms according to what they thought Circle would be able to comply with, while other stablecoins were unable to, such as Tether, which is like 10 times bigger than USDC. So basically, they were trying to craft Genius to where it would cripple Tether and benefit Circle. The problem is that in order to harm an organization like Tether, Ifinex, you have to do something to attack their reserves and or their claims of them. So you have to do things like put audit requirements in, so that every quarter, every stablecoin issuer has to report to the feds and send in a full audit of their books and verifying their reserves, supposedly. Well, I always knew Tether, having never, ever, once, ever, not ever produced one single third-party audit of their reserves, would never, ever do so in the future either. So basically, they're in like this nebulous zone where they're wondering if the full implementation of Genius will mean that they're made illegal and delisted off U.S. exchanges, if not planet exchanges. Because if you notice, Mica, Clarity, whatever Russia was calling their version of Clarity, China, they're all working in unison. They're all trying to get laws that do the same things to the same organizations done at the same time. And they're trying to do that to basically throw these people into an emergency that is very, very difficult for them to recover from. And, basically they're trying to cripple Ripple. I mean, not Ripple. They're trying to cripple USDT and other players that are not as big, but, certainly too big to just take down for funsies. So basically, they're trying to take them down via regulations. And that hasn't stopped Tether before. So the likelihood of it ever stopping Tether, in my mind, is zero. Basically, they'll have to get global exchanges to agree to do things like let Tether lose its peg. That would suck. But Tether, they've already been through the same bullshit. I want to say it was back in 2016 or 2017. They tried to ban Tether, and they tried to get it delisted off all the exchanges. And of course, not all of them would comply. So, basically it didn't work. They were not able to kill Tether that way. They attacked Tether's banking. They stole like $800 million from iFinex. And that was money that was backing Tether. They've done all kinds of shit. And if Tether was going to go down, it'd be dead already. But, they're not going to go. They're like the third largest private owner of U.S. treasuries on the planet. So, no, Tether isn't going anywhere. But yeah, so clarity, genius, it's all bullshit. If you're asking for either one, you're stupid and have no idea what you're doing in crypto. You have no idea why you're even here. Just like BIP 110 Sports, you got no idea why you're even in Bitcoin. I want you guys to go through the Bitcoin white paper and find for me the part where it tells us that we need to censor other people's transactions if we don't like what type of transaction it is. You're not going to find it, because the whole point of Bitcoin is to make your transactions immutable and permissionless, so that governments can't say, don't do business with that guy or that person. We don't like them. They don't support Israel. They don't like oil. They don't want to invest in war. Before they had these barriers to entry, and those are the kinds of mandates that they were pushing. I don't like that guy. He won't support Israel. Fuck him. He doesn't get banking. Well, now that cryptocurrencies are here, the sentiments between my ears are no longer monetary barriers. And if I'm doing business in a privacy coin like Monero, you have no idea who I am. You have no way to verify who I am. It's just a transaction happening on the network to you. And that's about how much mind any of us should be paying to any on-chain transactions. Because again, they're supposed to be happening instantaneously. When you submit a transaction to a cryptocurrency network, the miners are supposed to be including them as they receive them and not by any other way. Not with any subjective weighted fucking governance, but by an objective proof, i.e. a timestamp. Include as received, and then you don't have to worry about any of this shit. Because like 90% of the attack surfaces that currently afflict Bitcoin would be gone. But there's too many people out there that think they're smarter than Satoshi, and they need to try it another way and prove that no, Satoshi was smarter. This BTC pay bullshit is perfect evidence of it. But whether or not you actually derive that lesson from it, that remains to be seen. But basically, it's showing you what you get for trusting third parties. Bitcoin made it possible to eliminate all of them from your commerce. Use it as such. Anyway, I'm going to take just a break here, and then we'll get back into one more article before we close this bad boy out. But what song? I just need to get a sip of something, you know? Sonic Alchemy, here on the D Shift. Oh, we already listened to this one, but I like this song, so here it is again. time that right. Was actually hoping to have just a little bit more time and get in another article, but I let the music play just a little too long. Apologies. Hopefully we will schedule things better next time. Anyway, thank you very much for listening. I really appreciate everybody having tuned in. And yeah, it wasn't like you didn't have other options. I'm glad to have been the best of them, I'm sure. but nonetheless, you don't know that just by looking. You actually have to tune in to find out. Anyway, this episode will be up on my Rumble channel. I don't know if it'll be on Twitch. It's probably on Twitch. I think I'm actually broadcasting through Twitch right now. I'm not sure on that though. I haven't figured this restream out entirely yet. But hopefully soon I'll have it all set up to where I'm broadcasting on like here and on Twitch and on Rumble and on YouTube and all that other shit, you know? But anyway, so until Tuesday, you can tune in to my show on Tuesdays and Thursdays, 12 to 3 p.m. Pacific Standard Time on twitch.tv/DJERock23. But until next Saturday, y'all have an excellent shift. See ya.